Hey guys, Coach Kelvin here. Today I'm going to talk to you about my passive income earned for the month of August. So I had 4 income streams this month. Obviously they fluctuate month to month, so this is actually a lesser total than what I've earned in previous months, but that's okay. It's still pretty cool to actually tally it up and go through what I've been able to earn luckily. So I'm going to break it down now. So my first home, or my rental income from my Midland property here in WA, before expenses, that earned $1,360. Obviously after expenses, so including the property manager, any sort of admin fees, etc., and then also paying down my water rates, I'm left with $1,081.36. So this is still actually a pretty good amount of earnings, because this is still higher than what my interest repayments are on that property. So I'm really happy to have a fairly decent amount of earnings from that property, especially now that it's become cash flow positive. Any money I obviously earn from my rental on this property, I then divert into buying shares, and I just leave that where it is, because my interest obligations on this property are actually still quite low at just 2.49%. So I feel like I can get a much better return reinvesting that money into shares as opposed to paying down that mortgage. So my second property, which I have in Queensland, Yeppoon, before expenses, this property earned $5,987. Now this is a short-term rental and I own it 50% with someone else. So if this was paid off, this would be split sort of 50-50 with myself and the other party. But after expenses, so being a short-term rental, it has a lot more management costs. It has regular cleaning requirements and other sort of expenses that come out on a frequent basis. Plus I've also had a bill for the rates. So after those expenses, it earned $2,236.53. This property, any money it earns, it just gets put straight back into the mortgage account, so that any bills that come up can be paid with this, and we develop a bit of a cash buffer just to cover any future expenses, which for example this month we had to replace the fridge so that the tenants that were coming and going from that property obviously can keep their food cold, etc., and especially their beers. Alright, now the third source of income that I had was from dividends. Now, in the month of August, I had less dividend income because I usually receive my dividends on my Vanguard ETFs every quarter, and August isn't one of the months I receive it. But I did receive 2 dividend payments. One from a listed investment company, AFI, or Australian Foundation Investment Company. On this, I earned $55.20. And this dividend income is just simply reinvested into more AFI shares. So AFI is one of the oldest listed investment companies here in Australia. It has a brilliant track record of matching or slightly outperforming the ASX 200 index, and I like this investment because it just pays dividends on a separate month, so it sort of changes the frequency that I earn dividends and I get income. Obviously, if I grow this investment size and I put more money into it and that dividend yield increases, that'll help me out through the month of August, but I'm not too worried about that. I do have a lot more of my money in the ETFs which pay quarterly, whereas AFI actually pays every 6 months or biannually. The next dividend I earned was from the Charter Hall Long Whale REIT, or CLW. Now this investment, it paid $46.92 in dividends, and this particular dividend is really cool because the tax component on the dividend from this is actually generally about 50% tax-free. Now the reason for that is, being a REIT, a real estate investment trust, a lot of the tax is withdrawn, or the tax obligation of that dividend payment is offset by the interest on the loans that the properties have against them in the REIT, the depreciation of assets, any claimables through bills such as land rates, water rates, etc., and obviously any insurances. So when those earnings are passed on to the shareholders, all of the tax credits that you get by being invested in property also are passed on to the shareholders. So this is a very good diversification play, and that's why I like to have shares in CLW. Now I have this particular share, it pays quarterly, not biannually, so I just get other months where I'm earning a dividend income separate to my normal ETFs and AFI, so it's pretty cool. Now, the fourth place that I earned interest from was, that I earned income from was in interest. So I had two sources for this one. My first was in the peer-to-peer lending platform, Plenti. Now, 2 months ago, I withdrew most of my loans that were on the market out. So I have less capital in there, therefore I'm earning a lot less interest. So my Plenti interest for this month was only 17 cents. But of course, when that investment rate goes back up past the 4, 5, 6%, I'll be adding to that again and building up that investment part of my portfolio. So just 17 cents. The next place I earned interest from was from my mortgage offset. So whenever I sit money in this offset account, the amount that I have in that account just simply writes down an equal portion against the mortgage, meaning my interest obligation is smaller. So my offset account saved me $1.76 in interest. So yes, while these are all small sums from my interest income, it technically still is an income source, and that's why I've included it, okay? So yeah, I've included that there so everyone can sort of see that I am still listing all of my interest income and all of my income sources. Now the total income that I was able to earn for the month of August was $3,421.94. So still, this is a phenomenal amount of income, and if all of my living expenses were covered and my mortgages were paid off, you know, I could absolutely live off that $3.4 thousand. You know, that would easily cover the cost of my rent and then the living expenses on top if I had to. For now, I'm not required to do so, and therefore I reinvest all of my dividends, earnings and interest, because I would much rather grow my investment portfolio to the point where I don't need to keep investing to live off my investment income. While I still have mortgages attached, etc., I'm definitely going to need to keep earning a lot of money, therefore I still work full time between two jobs. Alright guys, I will include in my next video my next buy of shares for the month. I just haven't sent my money across into my next account due to having to take time off work last week for an emergency, but I will be back to it soon and I'll be posting more regularly from now on. So I'm sorry if you did not get to see much content from me lately. Guys, thanks for watching. If you got any value, please like, share and subscribe, and I really look forward to seeing you in the next video.